In the shadows of a once thriving economy, a legion of zombie companies lurked, their very existence sustained by the lifeblood of cheap debt. For years, they defied the odds, propped up by near-zero interest rates that allowed them to stumble forward, shackled to their insatiable hunger for borrowed money. But now, the clock has struck midnight, as interest rates surge and the specter of maturing loans looms. The fragile illusion of survival begins to shatter. What happens when the music stops, and these corporate phantoms must face the unforgiving reality of their own making? In the wake of the 2008 financial crisis, central banks around the world adopted near-zero interest rate policies, ushering in an era defined by unprecedented access to cheap debt. This environment allowed countless companies, often with fragile business models, to survive and even thrive on borrowed capital, giving rise to what we now recognize as zombie companies. As these entities proliferated, they became emblematic of a flawed economic recovery, sustained not by innovation or productivity, but by an insatiable appetite for easy credit. In the aftermath of the 2008 financial crisis, central banks around the world adopted aggressive monetary policies, driving interest rates to historic lows. This unprecedented era of near-zero interest rates, known as Zirp, allowed struggling companies to borrow freely, creating a landscape where many businesses survived solely on cheap debt. As this artificial lifeline extended, a new breed of zombie companies emerged, thriving in a world where profitability became secondary to the allure of endless credit. As the financial crisis of 2008 receded into memory, central banks around the world unleashed a torrent of liquidity, ushering in an era of near-zero interest rates. This unprecedented access to cheap debt birthed a new class of corporations, so-called zombie companies, whose lifelines depended precariously on borrowed money. With revenue streams dwindling and profitability a distant dream, these entities thrived in a false sense of security, tethered to a system that allowed them to survive despite their inherent weaknesses. Now, as the tide of easy credit recedes, the reality of their existence comes into sharp focus, revealing the fragility of an economy built on debt-fueled illusion. In the aftermath of the 2008 financial crisis, an unprecedented era of near-zero interest rates ushered in a new class of corporations, zombie companies whose lifeblood flowed from cheap debt. These entities, once vibrant and competitive, found themselves tethered to a fragile existence, surviving on borrowed time and money. As the years passed, the allure of easy credit masked the rot beneath, leading to a precarious economic landscape where survival hinged on the very debt that sustained them. Now, as the tide turns and interest rates rise, the specter of maturity looms ominously over these once thriving institutions, threatening to extinguish their flickering lights. As the clock ticks down, the facade of stability begins to crack. These zombie companies, once buoyed by the lifeline of low-interest loans, now face the grim reality of maturing debt. The pressure mounts, and with it, the stakes rise. Will they adapt or succumb? In this high-stakes game, the specter of insolvency looms larger than ever, threatening to unleash chaos across the economic landscape. As the clock ticks down, the once thriving landscape of corporate giants now reveals its cracks. Beneath the surface, the zombie companies groan under the weight of their expiring debts, their lifelines severed by the relentless rise of interest rates. An atmosphere thick with tension envelops the financial world, where every decision becomes a gamble and every delay could spell disaster. The specter of insolvency looms large, and the stakes have never been higher. As the clock ticks towards the maturity of their debts, these once thriving enterprises, now mere shadows of their former selves, face an unprecedented reckoning. The seductive lull of near-zero interest rates has transformed them into zombie companies, existing only by the grace of cheap credit. With rising rates tightening the noose, the air thickens with desperation as the specter of insolvency looms ever closer, threatening to engulf an entire economic landscape. If you find this video insightful, Please consider subscribing to support this channel. The stakes have never been higher. Survival now hinges on the ability to adapt or perish in a world that has turned its back on the era of easy money. As the world grapples with the aftermath of nearly a decade of near-zero interest rates, geopolitical tensions simmer beneath the surface. Nations once buoyed by cheap debt now find themselves navigating a treacherous landscape, where the specter of zombie companies looms large, threatening economic stability not just at home, but across borders. In a high-stakes game of power, leaders must confront the reality that their financial lifelines may soon unravel, forcing strategic decisions that could reshape the global order. As the world grapples with the fallout of near-zero interest rates, geopolitical tensions rise amidst a backdrop of financial fragility. Nations once emboldened by easy credit now face a stark reality, where the survival of zombie companies becomes a ticking time bomb in the global economy. Strategic alliances shift as countries reassess their positions in a landscape defined by looming defaults and the specter of economic collapse. In this high-stakes game, leaders must navigate rivalries and recalibrate their diplomacy, all while the clock counts down to an inevitable reckoning. As global powers maneuver through the treacherous waters of economic uncertainty, the specter of zombie companies looms larger than ever. In a landscape reshaped by rising interest rates, nations find themselves locked in a strategic chess match, where each move could either fortify their economic standing or plunge them into chaos. The maturing loans of these debt-laden enterprises serve as a ticking clock, setting the stage for a dramatic confrontation between the titans of industry and the relentless forces of finance. As the specter of high interest rates looms over the financial landscape, the once comforting embrace of cheap debt begins to suffocate the lifeblood of these zombie companies. No longer can they linger in the shadows of liquidity, their borrowed time now drawing to a harrowing close. The ticking clock echoes ominously, heralding an inevitable reckoning that will expose the frailty of their existence, igniting a fierce battle for survival amidst a landscape of economic uncertainty. As the clock strikes midnight on an era of easy money, the specter of those once viable companies, now mere shadows of their former selves, emerges from the darkness. With the weight of high interest rates tightening their grip, the remnants of the zombie economy face a brutal reckoning. A cheap debt that once propped them up is now a noose, and as loans mature, the inevitable collapse looms ever closer, threatening to unleash chaos on a fragile economic landscape. As the specter of high interest rates looms, the very fabric of our economies is tested. Zombie companies, once propped up by a relentless wave of cheap capital, now face the harsh reality of maturing loans and dwindling cash flows. The consequences ripple through markets, threatening to unleash a tide of bankruptcies that could reverberate across nations, leaving workers and communities in the wake of a financial apocalypse. The era of easy money has come to a close, and the fallout will reshape the economic landscape for generations to come. As the sun sets on an era defined by near-zero interest rates, the specter of zombie companies looms larger than ever. These entities, once buoyed by the lifeline of cheap debt, now face the grim reality of maturing loans and soaring rates, threatening to topple entire industries and destabilize economies. The consequences ripple outward, leaving millions of workers in uncertainty and eroding the fragile foundations of financial markets that have held for so long. As the specter of high interest rates looms large, the fragile foundations of our economy begin to tremble. These zombie companies, once buoyed by the lifeblood of cheap debt, now face a harsh reckoning, their survival hanging by a thread. The era of near-zero interest rates may have given them breath, but as their loans mature, we are left to ponder the consequences of a financial landscape littered with the remnants of unsustainable growth. Will we rise from this reckoning, or are we destined to repeat the cycles of our past? Thank you for watching. Don't forget to subscribe so you won't miss the next documentary.